Hi, my name is Daniel Dal Molin and I'm a financial planner with Global Financial Consultants here in Singapore. Today we're going to discuss some tips or a checklist for end of financial year for those Australian expats that are living overseas. If you're an Australian expat and you have income in Australia, that's positive income, for example, rental income. If it's positive, you can contribute that income or portion of that income to your superannuation fund. This is considered a concessional contribution. And each year you can make a concessional contribution up to $27,500. Remember that if you contribute into your superannuation account, you are paying effectively 15% tax for concessional contributions. If you're keeping your income, rental income, outside of super, then you will be paying effectively 32.5% income tax on that rental income. So if you're using your superannuation account to make a concessional contribution from your rental income in Australia, you only pay the 15%. So I think that's really good value for money. Prepayment of an investment loan. If you have an arrangement with your finance company or bank, you can prepay up to 12 months of interest on your investment property loan or investment loan in Australia and offset that against your income for this financial year. If you have a bit of surplus income this year and you want to use that rule, you can save some money, offset next year's tax deduction into this financial year. Another point to bring up for the end of financial year this year is to making sure your records are complete. If you're going to prepare your filing for your financial year, ensure that you have all your records. Maybe spend the time now to look through the last months since 1st of July and make sure that you have records that detail your expenses and outgoings. For myself, I have had a recent tax audit from the Australian Tax Department, and it wasn't very enjoyable, but it just gives me an idea of how detailed they can be. So the best way to help yourself is to make sure you keep good records in case you do have an audit. And by the way, it seems that if any Australian sells property as a non-resident investor, usually you will have a tax audit in the same financial year that you sell that property. And the last point is, what can I claim as a tax deduction for rental properties? Number one is the agent's commission. Number two is general repairs and maintenance to keep the property up to rentable standard. Number three is interest on your mortgage. Number four is depreciation on fixed assets over their useful or accounting financial life. And the last point is, please remember, if you've purchased a brand new property and you're going to rent it, then there are avenues where you can claim a tax deduction for depreciation of the construction costs of that building, not the land value, but the construction cost of the building over a period of time up to 40 years. But please discuss this with your tax agent as it gets a little bit more technical. I will be coming back to you next week with a new video. I hope you enjoyed these short videos that keep you up to date with what's happening in the financial space. Thanks very much. If you've got any questions, please reach out. My details are below, and see you next week.